Hey peeps, I'm here. Welcome back to my YouTube channel. Today we'll be talking about insurance, whether insurance is a scam or not. Joining me for this conversation is Hulisani Matodzi, who joined us on a previous video where we spoke about property and how to buy property and whether buying property is actually a good thing or not, or whether you can just afford to rent for the rest of your life. But you can check that out. You can check the video that we posted previously. I'll leave a link in the description box below, and I'll also put it in the cards for you to check that out. But for now, we'll talk about insurance, and Hulisani is joining us. Thank you once again, Hulisani, for creating the time to talk about all about finances.
Yes, thank you, Amma, for welcoming me once again. I'm hoping that we're going to continue on the same trend and be informative and educational to our viewers.
Yeah, absolutely. So be sure to stay tuned. So, Hulisani, I know today we'll be talking about insurance and whether insurance is a rip-off or not. But before we get to that question, perhaps you could just give us a brief explanation of what insurance is.
Yeah, so insurance is simply a product. It's a product where a financier or a business person offers to indemnify, or in other language, to pay out a sum of money to an insured in a case where an unfortunate or an unexpected thing happens, which in the context of insurance is the risk. So it's where somebody stands in your position to replace whatever you lose. And then they will take premiums in return. So you will pay them, and when you need them, then they will start paying.
Sounds like a very interesting thing to have, and I think it's very catchy as well. The way you've explained it, which is really correct, but then again at the same time it's just like a catch. You know, it makes it sounds so nice. And I know there are like different types of insurances. Maybe you just share like a little bit about the different types.
Yes, so with insurance, you've got the big main things, which is short-term insurance, and then you've got long-term insurance.
Yeah.
And within the two, then there's many other things that fall under the two.
Yeah.
But the biggest second distinction between the two will be under short-term or long-term, you will have business, and then you will have personal. Under both of them, and then from there, then you've got like your classes, which would be either your funeral covers, your life covers, which that has to do with your life and what happens once you die, and then you've got your medical aid. It's also insurance, which now deals with your health. And you've got things that deals with your property, and what deals with your property will be car insurance. It will be content insurance, house, and all the other things. And then similarly on the business side, they will have insurance for assets and things like those. So there's a whole spectrum of insurance, all the way down to cell phone insurance. You know, you insure your jewelry. So it's a whole world of financial products that we are buying every day, and an average person would have about 3 to 5 of those at a point in their lives, counting their property and for their personal life.
It sounds like living as it is needs, not needs insurance, but it sounds like living as it is can be covered by insurance. Almost everything that you come across in life, it sounds like there's insurance to cover that, from what I'm gathering. But so now, how do you know whether you need the insurance? How do I know? Okay, must I just insure everything? Must I insure my phone, my property, my health, the funeral? So that means I should just insure anything or not?
Yeah, so the answer to that question depends on who you're asking. Obviously, if you're asking an insurance or salesman, they're gonna say insure everything. Because I mean, the only thing you literally can insure is is relationships. That's the only thing. Every other thing can be
That's
insured
so true.
in this world.
Yeah.
So, but if when you're asking me, my analogy has always been how to determine if I need to insure something must be surrounded by the three main questions. The first one being the value of this thing. So the value will guide you in terms of understanding whether I need to insure it or do I not insure it.
Yeah.
So, for example, I don't use expensive phones. So if my phone dies today, I'm gonna walk in and buy another one tomorrow.
Okay.
So I'm not gonna insure it.
Okay.
Because the value of it to me, it's not so significant that I'll be significantly out of pocket if I were to replace it.
Got it.
But I'm also not rich, so I can't replace a car tomorrow if something was to happen to it. So then I know that the value that I place on the car warrants me to have an insurance cover on it. The same principle will apply to medical aid. I can't afford private health, cash, so then I insure my private health through medical aid, or something simple with content insurance, where a couple of years ago I didn't have much. Yeah, I'm sure I just have like blankets and pots.
Yeah.
I didn't insure them because the value of them to me was not significant. But now, after buying a couple of things that I think they're worth much, now I had to go and take out content insurance. So it's the value.
Yeah.
The second thing, it has to do with is this thing replaceable easily? Yeah. So you want to insure things for a lot of money depending on your ability to replace them.
Yeah, of course.
So if you've got like a diamond ring that you got from your great grandmother and you know this is priceless, you insure it so that when it gets lost, then you can get some compensation, somebody to make you cry better with the money in your pocket. So it comes down to the value and the replaceability of an asset. The last one is the likelihood of something goes wrong. So, for example, if I have an apartment and in my apartment there is nothing else other than this big couch that doesn't fit through the door, I'm probably not going to insure it against theft because, no one is going to be able to take it.
Got it.
But the chances of something goes wrong determines whether you need insurance or not. Like if you're driving on the road and you're the best driver in South Africa and you didn't bribe for your license, you're kind of confident in driving, but you don't know, the Quarter King from that insurance ad or some other guy who just bought their license
and they come and knock you.
Yes, so now you consider to say that I'm pretty safe. The likelihood of something goes wrong when I'm driving is low, but somebody else
may knock you,
may come and then so you evaluate that. And then based on those three, then you decide, do I need insurance on this item? Yes or no?
Wow, that's great. I like the way you gave it to us in the form of like 3 stages or the 3 ways to determine whether you need insurance or not. That's really beautiful. But then there is always a catch. From what I gathered, it looks like there's always a catch, because what if you don't claim at all? Let's say, because I understand you need to pay like on a monthly basis for whatever insurance you have, and then you end up not claiming. So will it then just come across as a waste of money? That now brings me to my question of whether insurance is a scam. Do we really need insurance? Let's say we're not even claiming. We don't know whether we're not going to claim or not. But what if we really don't claim? I know there are people who's been they've been paying, and there's like 5-10 years they haven't claimed for insurance.
Yes. So maybe let's set the record straight, right? Like in the beginning, I said insurance is a business person comes and say, if anything happens to you, I'll pay you. Yeah. But what I didn't say that is that this game is rigged. The insurance man is going to work out the rich one in any form. So they're always going to make money out of us. Yeah. And if you accept that, then it makes it easier to have insurance, because you know that the way it's priced, it's to benefit the person insuring you more than it benefits you. So after we settle on that one, then we come to, what if in the case where I don't claim for 10 or 15 years, And so insurance, it's selling uncertainty. That's what all they're selling to you. They're saying to you, I mean, you've seen those adverts on TV where they show a lady or a guy walking down the street and they say, "What if
what
a
if
car pops up out of nowhere?"
Yeah, it's all on the what ifs.
Yeah, and that what if is what they're selling us. So, is it a scam? I don't think it's a scam, because a scam would involve them deliberately selling you a product that they know you will never have the ability to claim for. I've received a call with somebody saying that they're offering me an insurance product to pay me if I am injured so if I die as a result of a gunshot. And then they had some other conditions.
Yeah.
When I looked at the conditions, I realized the chance of those things happening all together, it's like almost zero. I can die of a gunshot, but it can't be between 8 and 9, and then all the other things.
Yes.
For me to meet all those criteria, it's gonna be impossible.
Okay, yeah.
So my chance of claiming there is like literally
So
almost
then
zero.
that become a scam?
That's a scam. When somebody is designing a product in a way that they make sure that you're never ever going to be able to use this cover that you're paying for. And that's what I said to the lady. I said, it's going to be difficult for an incident to happen to me and all those 3 other things happen. So the chances that I claim on your insurance are zero.
Yeah.
Therefore, it doesn't benefit me and I didn't take the product. So in that case, but in cases where it's easily defined, if somebody knocks your car, then the insurance steps in. In that form, then insurance is not a scam. I mean, there's a question of fairness, which is a whole different thing from a scam. Like your medical aids, those are never fair. They will never really be fair, because they have a list of 50 conditions they don't cover, and they don't tell anyone. They tell you the day you claim that this forms part of subsection 5 of paragraph 13,
which you're not covered
subscript what, and then they're not gonna cover you. But insurance in its original form, the format, is not a scam.
Got it. Wow, that's well explained, because I've always just wondered, whether people are out there just wasting their money. But again, like you said, people do get into it and they're happy paying insurance on a monthly basis, because they kind of have already accepted that really they are kind of benefiting more, but I just need this for the what ifs.
Yes. Yeah. So yeah, that's the case with most of us. I think most of us would adopt an approach of saying, I just want to insure anything. So if anyone calls me and say they'll give me $1 million if this happened, I'm taking it. And I think an analysis needs to go into those things, especially because you don't want to insure something for a chance that is highly unlikely to happen.
Yeah, that's true.
And you don't want to also over-insure. So, because there's a concept of being over-insured. You would hear it in the world of life covers the most. Where you've got 3 life covers. One is for 6 million, the other one is 18 million, the other one is 10 million. The bottom line is you won't be there. And the sort of like the insurance that you take needs to actually be in line. Some companies, they will refuse to insure you after you've had so many life covers on your life. So being over-insured would be as simple as insuring a couch that is worth 1,000 rand, and you insure it with 3 different insurers for them to pay you 5,000 rand. Now you are in a situation where
that's wrong, right?
Yes, the likelihood
that's illegal,
of the 3 of them paying you 5 times the value of the couch, it's not possible, and the excuse they're gonna give is that it's over-insured. So that's the one thing we just need to bear in mind.
So is it illegal?
Well, it's up to the insurance companies. Some products, they would have a specific clause that you cannot insure one thing multiple times. Some they won't, but they can still try to deny your claim on the basis of it looking like you're trying to make money out of the asset. So just my last question to everyone is that as you get the comfort of just having insurance and you enjoy the safety of not worrying, at the same time we just need to bear in mind not to be over-insured.
That's true.
And then at the end of it, we don't benefit from the premiums that you're paying out.
That's true. How do you know if someone needs a whether you need a basic insurance. I know there are different types of insurance, but then how do you know whether you need just the basic of each of those that you're going for, or whether you need the most advanced or the most expensive one?
Yeah. So how likely is something to go wrong? If it's like very high, you want to insure yourself for the maximum value you can benefit from this asset.
Yeah.
What's the likelihood of something goes wrong? If the likelihood is very, very, very low, then you just want to insure yourself significantly enough for safety.
I see.
So I mean, if you are an Uber driver, chances that you might die out of a car accident and your car might be written off, it's very high compared to somebody
to me, who goes out once a week.
Yes, you go out once a week, or you are a professional nurse and you're working from an old age home and you stay there. You only drive once a month. And I'm not saying that the chances of you dying from a car accident are less.
You just say,
but I'm just saying the likelihood of it happening for somebody who's on the road 24 hours the whole week is higher. So that person would need to make sure that they insure themselves to the maximum of what they can get out of the insurance product. Whereas the other person, and in the States, they have a lot of this, where they have like collision insurance only, where you're only insuring your car against any loss that is suffered by any other person. But with yourself, you go like, I drive twice, in a week.
Maybe not.
Let me not have that kind of an insurance. So that's how you decide the likelihood of something goes wrong. If it's high, go for the sky, and if it's low, then rather pay as low a premium as you possibly can, and then use that money for other things.
Of course. Wow, I love that. Amazing. So this brings us to the end of today's discussion. It would have been nice to just talk more with you. You just always have so much to share, Hulisani. And once again, don't forget to check out Hulisani's YouTube channel, Epic Financial Solutions. That's where you can learn more about these tips that he's sharing with us. But this is it for today. So if you enjoyed this conversation, don't forget to give this video a big thumbs up, and also to subscribe to Arma and Peeps to join the Unity and Change movement. So Hulisani will join us again for our next video, which is gonna be the last video on the financial series that we've been running. So that video will be on black tax, and we'll just talk more about what is black tax and how does it affect black people. So for now, take care and goodbye.
Thank you.